What's up, traders? So today I'm going to tell you why I think SoFi could be a stock that creates millionaires and what option strategy I'm using in order to get access to it. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, I need you to smash the like button right down there. Our last few videos have been getting around 400 likes, and I need at least 500 likes for this video, which means I need you to help me out. All right, but also you can subscribe to the channel. We have a lot of great videos coming up here shortly. And do remember that I'm not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I've built wealth over time. All right, so first things first, SoFi Technologies, ticker symbol SOFI, is currently a $13 stock. We can see it's down about 1% today, and it's currently sitting at a market cap of about 14.6 billion. Now, if you're not familiar with SoFi, they provide a consumer-focused financial technology platform, and really they're an online bank, and they have a multitude of different loan products, but they do utilize technology and AI in order to determine a potential borrower's creditworthiness. And not only do they use their AI software for themselves, they also lend it out to other financial platforms and make money off them as well. Now, currently you can see that their PE ratio is 80.76. So they are pretty expensive currently. And I really don't like paying an 80 PE ratio. And so in order for this PE ratio to come down, you need one of two things to happen. You need one, for their earnings to grow, or you need for their stock price to go down, or preferably a combination of both. And we can see that their earnings are absolutely growing. If we scroll down here, we can see that last year's earnings for this quarter was 1 cent per share. And for this quarter, they are expected to do about 6 cents per share. So that is over a 500% increase year over year. So they are absolutely growing their earnings. But if we look here, we can see that their financials have been growing over the last 5 years. And so these dark blue bars here are the revenue for the company over the last 5 years. So we can see over here, the year ending December of 2020, they had $0 of revenue. And then the year ending December of 2024, they had $3.7 billion in revenue. And we can see that their earnings has also grown as well. So the year ending December of 2020, they lost $650,000. And in the year ending December of 2024, they made $498 million. So that is massive growth. They grew 265% on their earnings just last year. And this quarter upcoming, I just showed you, they are expected to grow 500%. So that is great. Their earnings are obviously growing. Now let's take a look at what analysts think of the company currently. All right, so there are 19 analysts that are currently covering the stock, and collectively they have it as a hold. However, if we look at their price targets, we can see collectively at the mean target, they have a price of $13.97, which it is currently trading for $13.09. So it is cheaper than their current mean price. Now, there are a few analysts that have it as a $20 price point, and then there is one bearish analyst who has it at a $4 price point. But collectively, which is the number that I look at, the mean target is $13.97. So that is the price point that I want to keep in mind. Now, one thing that I always like to look at is, are insiders putting their money where their mouth is? And I always pay attention to insider buying, where I don't really pay attention to insider selling. And the reason for that is, people will sell stocks for a multitude of reasons. You know, it could be they want to buy a new house, they want to pay for their kids' college education, they want to go on a huge vacation. There could literally be dozens of reasons why a person sells a stock. However, when a person buys a stock, there's only one reason they do that, and that is to make money. So I always pay attention to when somebody who is on the inside of the company buys shares. All right, so I took a look into SoFi, and although there's been no buys this year in 2025, there were 5 different buys in 2024. Now, 4 of those buys were the CEO, Anthony Noto, and he bought 4 different times between the month of May and June of last year. Now, one thing I will point out is that he paid around $6 for the shares that he bought. And obviously that was a good buy because the stock is currently trading for nearly double the price that he paid. But we can see that every time he bought shares, he spent around $200,000 doing so. And after his last buy, he owned 8.5 million shares. However, another insider, Eric Schopenhauer, looks like he purchased 30,600 shares on December 16th at a price of $16. All right, so he believed with whatever information that he has that the stock was a great buy at $16, so much so that he spent $500,000 buying those shares. And that was an increase. He previously, before buying it, he had 30,000 shares, and now he owns 46,000 shares. And so that is good to know. But now let's take a look at the chart. So here we are. These are daily candles, and we're looking at the last 6 months. but we can see it's been in for a little ride. We can see it got as high as $18.42 on January 24th, and then it got as low as $8.60 just last month on April 7th. All right, and since then it's been mostly on a nice little uptrend, just like most other stocks. But what I want to point out here is two different data points. So we can see this blue line here is the 200-day moving average, and it's currently around $12.15. And typically the 200-day moving average is one of the strongest points of both support or resistance. And we can see that even going back here. We can see the stock dropped, it hit the 200-day moving average, and then immediately popped back up. And then it followed the same thing here, is it hit the 200-day moving average and it popped back up. But then, of course, with all the tariff headlines during the beginning of April, no support could withstand that. And so it did pop down around that time, but we can see that it is back above the 200-day moving average. So one, it should see some good support around $12.15. But also another data point that I like to look at are the Bollinger Bands. And the Bollinger Bands are these black lines here, but they just aim to show you the price range that a stock is expected to trade within. And so I want to look at this bottom Bollinger Band here, and we can see that it's at a price of $12.55. So between that $12.55 and the $12.15 mark, we should see some good support. And so what I think I want to do is I want to go ahead and sell puts at a cheaper price and agree to buy the shares at those cheaper prices. And in return, I'll get paid to wait around. And so for those who are new to options, let me quickly explain selling puts. However, if you are experienced with selling puts, make sure you stay till the end because I'll show you a better way to go about it. So when you sell a put, there are two main objectives. And it's one, to generate income, or two, to buy the underlying stock at a cheaper price. So when you sell puts, you either one, want to make money, of course, and or two, you want to buy the stock at a cheaper price. And selling puts is literally like selling insurance for stocks. And here's what I mean. Let's say I have ABC stock that is currently trading at $100 and I like the company and I want to purchase the shares. So I could potentially sell a put at, let's say, $90. And as I'm selling a put, I'm essentially saying to the buyer, hey, I will buy your shares of ABC stock that are currently trading at $100 and I will buy them from you if the stock crashes below $90. However, for doing so, you have to pay me, let's say, $200 right here, right now. And this contract is only good for the next 30 days. And from there, two things can happen. Let's say ABC stock stays above $90, then we just keep the $200 we were paid and we go about our day, and we can do that trade over and over and over and over again. However, scenario number two is if ABC stock drops below $90, then we still need to purchase the shares of ABC stock at the $90 that we agreed upon. However, we still keep the $200 that we received. And so as a put seller, you are essentially selling insurance for the stock. And just like with your car insurance that you pay every single month, the insurance company keeps the premium that you pay them whether you get into a car accident or you don't. And so here's a quick example of selling a put with a real stock. So let's say Apple stock is currently trading for about $220. And let's say you're interested in buying Apple stock at a cheaper price. Then what we could do is we could sell a put, let's say at $200, and that would be our strike price. And we could select an expiration that is 30 days out. And for selling this put, we would receive $150 immediately right here, right now. And so if we look at this profit and loss chart over here, so Apple stock is currently $220. If the stock price were to go up, then we just keep the $150 we received. If the stock price stays the same, then we just keep the $150 that we received. If the stock price goes down some, we still keep the $150 we received. However, if the stock price dropped below our $200 strike, then we will be forced to buy 100 shares of the company per contract that we have. And that's literally how selling puts works. However, now let's go and take a look at the few data points that I look at prior to selling puts. But all right, we know that the Bollinger Bands have a low price of $12.55. So now let's look at the expected move. So now we're looking at the expected moves, but I want to go about 30 days out. And so we have this expiration here that is exactly 30 days out. And we can see that it has an expected move of $1.35. Now, the expected move is just the largest move that the options market currently has priced in for a specific stock by a specific date. And we can see for SoFi, for this date of 30 days out, they expect it to either move up or down by a maximum of $1.35. So on the lower end, that puts us at about $11.74. All right, so the Bollinger Band said $12.55. The expected move shows $11.74. And normally I would select the more conservative of the two. And so in this case, there would be the expected move because it's lower. However, both numbers are so close to each other that we may make an exception for this. But let's head on over to Thinkorswim to look at our last data point. But real quick, if you know anybody who could use help generating income off the cash that they already have, tell them about the Trader Freedom community. We have strategies all the way from zero DTE for our day traders, all the way up to monthly income for our more busy professionals. But not only will they get my exact trades when I enter them, they'll also get my full options course from A to Z. Thirdly, they'll have access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goals as them. So if you know anybody who needs help generating the income off the cash that they already have, tell them about the Trader Freedom community. The link is in the description below. All right, so now we are in Thinkorswim, and I've put up the options chain for SoFi. And so next thing we need to do is select the expiration date that we want to use, which was 30 days out from now. And now I want to look at the delta. So the delta is this column here, but that just aims to show you how much an options premium will move per a $1 move in the underlying stock's price. All right, so for example, at this 0.45 delta, which is at the $13 strike, that is saying that this options premium will move about 45 cents per every $1 move in SoFi stock price. However, most successful traders that I know use the delta as the probability of the event occurring. So to me, I look at this and I say, all right, there's about a 45% chance that SoFi stock, which is currently at $13.11, drops down to $13 by this expiration date. So in other words, you would have about a 55% probability of profit if you were to sell puts at that $13 strike. And so for me, I like to select deltas that are 0.20 or lower because I like to be conservative. And so here we can see if we were to go under 0.20, this strike right here of $11.50 will put us at a delta of 0.18, and we would get paid anywhere between $22 to $23 for selling this put right here, right now. All right, and that's about a 2% return over the month. And that is great. Annualized, that would be about a 24% return. However, with cheaper stocks such as SoFi, it's okay to be a little bit more aggressive. And so I think I'm going to go up to the $12 strike, which at that price point is still below our lowest Bollinger Band mark and also below the 200-day moving average that we looked at. And for this, I would get paid anywhere between $34 to $35 right here, right now per contract that I sell. And that's about a 3% return for the month or a 36% return annualized. So I think that looks good to me. So let's go ahead and look at a trade. We could just go ahead and select the bid price and it will go ahead and load the ticket for us. And so we can see that we are selling. And then here we can select the amount of contracts we want to do. Now, this is totally up to you and your account size, but just remember, if the stock price were to drop below our strike by the expiration date, then we are required to purchase 100 shares of that company per contract that we have. And at the strike of $12, that would be $1,200 per contract that you will be required to purchase if the stock price does drop below our $12 mark by the end of the expiration date. But let's say for the purposes of this video, we'll do about 5 contracts for today, and then I may sell more tomorrow and then the next day and the next day until I've reached the amount of contracts that I want to sell. All right, but we can see at the mid price, we'll receive 34 cents per share, which is $34 per contract. And if we're ready to go ahead and submit the trade, we can go ahead and click review. However, let's look at the P&L chart. So if we look at the number at the top left, we can see I will collect $170 total for this trade. And that number shows you how much the contracts will be worth by the expiration date. Now we can see if the stock price stays right here where the red dots are at $13, we just keep the $170 we were paid and we go about our day. If the stock price goes up, we just keep the $170 we were paid and we go about our day. If the stock price goes down some, we just keep the $170 we were paid and we go about our day. However, if it drops down below our strike of $12, then the contracts become worth less and less and less. And then it looks like our break-even point is right here at around $11.60. And then assuming if the stock price were to go down even further than that, then the contracts would be worth less and less and less. However, in this scenario, you do not care because you were fine with purchasing the shares of the company at the strike price that you selected. All right, so if I were to place this trade here right now, in my mind, I'm going, I would love to purchase the shares of SoFi at $12 at a later date. And either way, I get paid to wait around. All right. And when you have that type of mindset, that's when trading becomes very unstressful because I really don't care either way. I am going to sleep like a baby if SoFi stock goes up, and I'm going to sleep like a baby if SoFi stock goes down. I really do not care. But what I do know is I do like to get paid to wait around. And if you were one of the people that loved SoFi at $18, then you should absolutely love it at $12. Because I mean, who doesn't love a discount? And like Uncle Warren says, be greedy when others are fearful and be fearful when others are greedy. But that's how I plan on trading SoFi stock. But like I said, if you do know anybody who could benefit from the Trader Freedom community, the link is in the description below. Go ahead and send it to them. I would love to help them reach financial success. But that is it for this video. Make sure you liked the video and subscribed. But I will see you guys on the next one. Peace.